Thanks everyone for coming out. Really appreciate it on this Sunday morning as well. It's a pleasure to see so many people here. My name's Matt. With me is Simon. We're from Collective Shift, Australia's leading market research provider on all things crypto. Today we'll be covering how to sell the top or ways to approach selling the top in the bull market. Just a quick disclaimer, we are not financial advisors, so anything we say is for informational purposes only. But Simon, let's kick into some scenarios for selling.
Hey guys, thanks very much. So I'm going to run through a few scenarios of what it's like to basically sell, because I think it's important to understand what's likely to happen. Probably more importantly, like what emotions you're actually going to go through when you're actually going through this process of selling, because I don't think many people actually appreciate the difficulties that you're going to go through in your mind. So I've got a few slides here of scenarios, so let's get into it. So this is the scenario here. This is the graph going up. Our ultimate goal in crypto is right to sell here. We want to sell the top, right? So this is what I actually call the genius scenario, because this is the ultimate goal of crypto, wanting to sell on the top. So can I get a hand? Who wants to know how to sell the top of the crypto market here? Everyone but Trav, apparently. And so here's the thing. My hand is also up, guys, but I'm not a genius. You are not a genius either. You are not going to sell the top. And so we need to be a bit more realistic about what we're actually going to be able to sell at. And so I'll try and back this up, I guess, with a little bit of research into what selling the top is, because I think selling the top is actually a myth. So this is the actual chart of Bitcoin in 2021. This is the top in November. And so we can see I've got a couple of lines there. I've already given it away, have I? No. The blue line is 5% from the crypto top, so 69,000 US was the top. The blue line is 5% from the top. The yellow line is 10% from the top. And down there, the purple line is 15% from the top. So the realism of whether you're going to sell the top, to sell within 5% of the top, which I think is 65,000, you've got 3 days to do that in. So there's only 3 days where you're actually going to sell within 5% of the top. So in a 4-year cycle, are you good enough to actually hit that mark within 3 days? I'm not. You're probably not either. What about 10%, which was, when I say 62,000? You had 16 days to sell within 10% of the top. So still really hard in a 4-year cycle to sell within 10% of the top. And finally, the purple line, you have, 33 days there to sell within 15% of the top. So when I say selling top is a myth, I think it is. You're not going to do it. But if you sell within 15% of the top, I think you've done an amazing job. So probably get that in mind of where you're actually going to be able to sell. When people have these projections out of how high it's going to go, take a little bit off of where you actually might be able to do that. I'll tell you my story a little bit later of where I actually sold it in 2021. I wasn't even within 15% and I was pretty happy with it. But what about meme coins? Obviously, meme coins are the flavor of the month. It's what everybody's actually interested in. Like, oh yeah, my meme coins are going to do really well. So this is Dogecoin in 2021. Is anybody brave enough to guess how many days you had to sell within 5% of the top for Dogecoin? Shout it out, anyone. It's probably close, but 5% of the top gets 0 days. 0 days. And what do I mean by that? The price went up and came down more than 5% within less than a day. 10% from the top, you had 1 day. Again, how good are you at selling your meme coins? 15%, 4 days. And like, this is pretty crazy. You're not going to sell anywhere near that top. And so I thought, well, let's do one more. 25% from the top, you had 5 days to do that. So very unlikely that you're going to actually achieve even within 25% of the top for a meme coin. And to give that, I guess some numbers in your head, if you've done incredibly well with a meme coin, I'm going to use nice round numbers for my maths. If you've had an amazingly good run on a meme coin, you've got to $100,000, it's back at $75,000 in a couple of days. Like, that's an emotional roller coaster to go through when you're seeing those tops. So have that in mind. You're not going to sell the top. Be a bit more realistic about where you're actually going to sell. So this is scenario 2. The graph goes up like this. You want to sell here. That's the goal. You've got your target price. Happy days. Price does that. This is really a scenario you don't really want to be in. This is what I call the oh no scenario. You want to be avoiding this, guys. This is really not going to be in a good place. Now the market is going to be dictating to you. And so I guess we all might experience in some way, shape or form, but how do we try and avoid that? So I'll give you a few tips on how I'm personally trying to avoid it. And so the first one is having realistic goals. Like, where did you come up with your numbers? Was it some crazy guy on YouTube who was saying we're going to the moon? Is it kind of analysis? Is it comparison? How you come up with your realistic goals? It's a really important one to try and really get that in mind. And I actually use the 50% idiot theory for myself, is that if I think it might get to X, Y, Z, I'll take half of that off and actually start selling some at that point, because I'm not going to get it right. And that kind of brings me to my second point, which is stepped sell targets. You don't want to be trying to sell everything all at once. You don't want to have this one target where you're going to sell everything. You want to actually have some multiple sell points as the price goes up. That way you're locking in profits as it's going up, regardless of what's going on. So that's a really important one, and we'll touch on that a little bit further on to tell you a bit of a practical example of how you do that. Don't get stuck in an echo chamber. For everyone who's been here since the last cycle, who was waiting for a $100,000 Bitcoin last cycle? Yeah, we all got stuck in that echo chamber. We all got caught up in that, and none of us were actually reading the market and listening to it. So if you are, really confident and passionate about something, guys, I would probably recommend that, try and find someone who's got the opposing view to you, because realistically, everyone can't be right. So make sure you're not stuck in that echo chamber and really start to listen to opposing views to what you might think. And this is the hard one. Accept that you might be wrong. All the research and all the analysis that you can do, you're going to let your ego get in the way if you don't accept that, hey, the market's telling me that I was wrong. My sell target wasn't actually going to get there. Maybe I've got to have a different plan. And we'll actually touch on that later as well, because, we talk about having an ejection plan. You've got to have a plan when the plan doesn't go. Scenario 3 here. So here we got another chart. The price is going up. We get to here, and you've noticed that I've said you're supposed to sell here. And this is what so many of you are going to get caught into. Price is going up, you're feeling euphoric, you hit your target price, and you don't sell because you're actually thinking this is going to happen. You're actually going, no, I can't sell. All this money's going to be left on the table. I'm not going to sell. I've got my goals, but I'm not going to realize my goals because I've got this greed. I've got this greed and FOMO coming in that I think it's going to keep going up to the moon. And so I think this is a really bad strategy because, again, you're not a genius. You don't know this is actually going to happen. And I want to put some, data again around to the fact that the prices don't always go up forever. The prices do come back down, guys. And how do I explain that? Well, Bitcoin is very volatile. We know it has massive drawdowns. Last cycle it had an 80% drawdown. Will it do 80% this time? Maybe, maybe not. I'll let you guys try and figure that out. But from 2021, I've got some lines here. So that yellow line, that is the bottom the Bitcoin price went back down to, 15,000 US dollars. And so those two blue lines is the time in between where if you'd sold your Bitcoin, you didn't need to worry about it, the price was going to come back down below it. So you had 101 weeks there, 707 days, where if you'd sold your Bitcoin, the price was going to come down back below it. Now, I'm not saying that means you can sell high and buy again low. That's also a fool's game. But what I'm trying to get into your mind here is that simply that if you're going to sell your crypto and you're worried about, oh my God, but I'm going to leave so much money on the table if it keeps going up, it's probably not. The price is probably going to come back down and you'll feel okay again. So my personal story of selling crypto in this cycle was in 2021 here, was that first run up, for those that remember, was in March 2021. I had my sell target of Bitcoin. I sold a fair amount of my Bitcoin at 50,000 US dollars. And so, sounds good now. Then the price went up $65,000. How did I feel then? I felt like an idiot. I was going, oh my God, all this money I've left on the table, feeling stupid. What was I doing? Why did I stick to my plan? I should have changed my plan. And then what happened? With that big crash in the middle, we dropped 50%, back down to $30,000. I'm a genius again. The emotional roller coaster runs back up, $69,000. I'm an idiot again. I'm counting about how much money I've lost. And then, classically, big bear market, $15,000. I'm an absolute genius again. So that's kind of the emotions going to go through, guys. So this is why having a plan, sticking to it is kind of important. Meme coins again. Meme coins, again, flavor of the month. This is Dogecoin again. So Bitcoin, 80% volatility. Dogecoin had 95% down. Your other meme coins are probably going to go down 99%. And so the thing I kind of want to drive home here is that if you sell your meme coin at any point in time, it's probably going to go down below that price. So don't always just think about how much you're missing when it goes up. Take those profits, because at some point that meme coin is likely going to crash down below. And so to guess numbers again, to give that to you, you put $5,000 into your favorite meme coin, you've 20x'd it, you're an absolute genius, $100,000. if you don't sell and you, for some reason, think that your meme coin is special, your community is special, it's going to keep going up forever. 95% down is back down to $5,000. And so the point I really want to drive home here is when you get in that greed scenario, and if you start going, oh, my portfolio is looking really good, if it 2x's from here, it's going to be this much. If it 3x's from here, it's going to be this much. I'm going to get that better car, going to get that better house, whatever it is. When you start calculating up, calculate down. Counter that and see how you feel about your portfolio going that far, and it might help with your decision-making process. Because it's very easy to think how high it can go. It's painful to think about how low it can go. So keep that in mind, especially with meme coins. Scenario 4. Price goes there, you sell there. Price goes up, oh my God, I'm an idiot, what did I do? Price goes down. So what I'm basically saying is that all these scenarios, this is the likeliest scenario, this is probably the best scenario, this is the one you want to be in. You want to be selling up into that strength. That way you're dictating to the market with your sell prices, because once the price starts going down and you're in that oh no scenario, the market's dictating to you. So realistically, this is the scenario that you want to be in, this is the scenario you're likely to be in. And how do you know kind of when you should be selling in the strength on the way up? That feeling we felt since Trump got elected, how the price has been going crazy and everyone's checking their phone every day, every hour. That's kind of a feeling where you might be considering selling. That's when everything's a bit euphoric. Matt, over to you to give a bit more practical tips. 4
scenarios, really good there, Simon. Now, how are we actually going to execute on this in 2025? Hopefully a lot of you are sitting on some unrealized gains right now. And hopefully that continues throughout 2025. But as Simon said, don't want to be round tripping or just not selling at all. So tools to actually execute on your plan and some practical tips as well. Where are your wallets? I think this is something, honestly, a very simple question, but from our hundreds of conversations over the years with members, you see so many of them just forgetting simply like how many wallets they signed up to or registered on different blockchains. If you are one of those people, I definitely encourage you just to maintain a spreadsheet and simply just having it in one place where all of your wallets are and what those particular addresses are. Why does that matter? Just when it becomes time to sell, you actually can think a lot more clearly about just executing. We've also got here, are your hardware wallets ready? So I've heard stories from many members and other friends over the years where they go to use their hardware wallet, maybe haven't used it in 2 or 3 years, and the firmware is all out of date. Maybe the LED battery is like draining. They like absolutely panic and they don't know what to do because they think they've lost their cryptocurrencies. If that is a day you are wanting to sell and maybe your seed phrases are stored elsewhere, that can just really result in just not executing on your sales strategy. And as Simon also alluded to, we have such a finite window of selling near the top. So time is very precious in those moments where prices are at all-time highs. We also have here, what exchanges are you using? Similarly to my first point, just simply recording that and just staying up to date with like the policies of certain centralized exchanges, whether they're still supporting your local like currencies or Australian dollars. Are my cryptocurrencies that I hold still listed on that exchange? And also doing that just so you know when it comes time to sell, you can confidently go ahead and actually execute on that. Another sort of page here on tools and resources to use. You can also think about what currency you're wanting to sell into. The tax implications on a lot of people think about in this crypto space, taking some AUD, some Australian dollars off, putting it back in your bank account so you have enough to pay for taxes is something that's very common. But a lot of people, if their investment goals are really to just accumulate Bitcoin, as Ben alluded to in his speech yesterday, if you're really just using altcoin investments just to take profits, sell some into AUD and then maybe put the rest into Bitcoin, that's also something you should just think about. How are you actually going to do that? Just writing all of this down. Again, you'd be surprised at how refreshing it is once it's all on paper. OTC or over the counter. I strongly encourage a lot of you to just go on a lot of these Australian exchanges websites. Often a lot of them offer like over the counter, tasks or over the counter offerings with customers, and you may be surprised by the threshold that they accept. It's actually not as inaccessible as I think a lot of people think. So using an OTC desk when it comes time to sell can be a lot more convenient and a lot less stressful for a lot of people. So throughout 2025, strongly encourage you to at least check out what other OTC offerings are on certain exchanges. You can probably go and ask a few of them that are in the floor today. And then finally, tax considerations. I think a lot of people get tripped up on maybe not wanting to sell because they want to take advantage of the capital gains, maybe discount of 50%. But again, as Simon really just demonstrated there, you have such a finite window of time that if you're waiting for that 12-month mark to get that discount, the prices may already have started going down by 40, 50, 60% by then in extreme sort of altcoin scenarios. And you may actually end up better off just having sold and not even accessing the discount. So again, strongly advise just getting in contact with the likes of Crypto Tax Australia or other sort of accounting firms that actually understand crypto and just having a conversation about it.
All right, so here is some very kind of basic ideas of how to actually sell. If you haven't thought about these things, these are some of the most simple ways to come about it. And you really do need to have this plan, and not necessarily just one of these plans. You might do a mix. And when me and Matt talk about our own kind of personal sell strategies, you'll see that we kind of do a bit of a mix. But very simple ones, and these are not price targets. Stop taking photos. Sell strategies are basically having a set target price. Target pricing is having a set price that you want to sell at, and you sell a percentage of your portfolio. So again, we talked about that earlier of having stepped sell prices as you go up. So that way you're realizing some profits on the way up as you're going along. You're locking that in because there's nothing worse than missing the boat and having too high of a one. So it's always important to have those target prices which are realistic and going to actually get you some profits, hit your goals, but you're taking profits off the table as the market's moving.
Yeah, so I think that's by far the most common sales strategy, in my time in crypto, and it's talking with people. Time-based is also another approach you can take to sales strategy. This is for people who are like firm believers of sort of the 4-year cycle theory, and more so when you do execute a time-based sort of sales strategy, it can help remove a lot of the emotions where you're so locked in on prices. So in this example, you're actually projecting ahead and maybe picking certain dates where you want to be taking some chips off the table, regardless of where the price is at. So again, I've had conversations with people who do this. It's less common than Simon's example of the price targets, but it's still one to consider approaching in 2025.
And so this another one is an easy one to do because everyone kind of usually understands the dollar cost averaging in idea, where you have a certain amount that you're going to buy every week, every month, whatever it is, over a long period of time. And so a lot of people always go, but to me especially, it's like, Simon, you have all the time in the world, you're watching the markets, I can't do that. And so dollar cost averaging out or the time-based scenario are two great ones where you don't have the time and the resources to be able to be constantly on top of that, and so you want to take that thinking out of it to a degree. So dollar cost average out is the same thing as dollar cost averaging in. A certain amount you're going to sell at a regular period. The only caveat I would put to dollar cost averaging out is it's probably going to be a smaller window. Like when you're dollar cost averaging in, it might be years you're even doing it. Dollar cost averaging him out, you might do it over a smaller period of time. And what's the trigger for that? Maybe it is a time-based thing. Maybe it's a target price thing when you start this. But again, this is taking that emotional side out of it and not following the market constantly, and just able to make you actually execute on your sell strategy.
We're coming to the end soon, so we may have some time for Q&As as well. So just think of some questions, but really want you to all pay attention to having an ejection plan. So almost a fail-safe, what happens if just, shit hits the fan, so to speak, and, prices are tanking and all your targets and all your best strategies are now in jeopardy. So a really good quote here from Mike Tyson, everyone has a plan until they get punched in the face. So in crypto, it's so volatile, so risky. There's a lot that can impact price action. So I think having an ejection plan, or in other words, like what are you going to do if your thesis or your outlook is invalidated? And how do you even know that it's invalidated? And what are you therefore going to do when you actually get to that point? So a table here, you can just even think about as just an exercise, or even I've got a nice anecdote myself from 2021. People who have been long-term in the space might remember, towards the end of 2021, we were creeping up towards, 50, 60,000 US dollars, got to $69,000. Everyone was talking about, 100K is like a magnet. We're going to reach 100K in 2021. Federal Reserve Chair Jerome Powell came out in November 2021 and really just strongly signaled that the days of zero interest rate policy in the US and just essentially just free money or very stimulatory macro environment, those days were over. and into 2022, they were going to start increasing interest rates. And that was like the worst news for risk assets such as crypto. I personally made the mistake of having the blinkers on and just still going by the 100K sort of target. But therefore, with such new information in the market happens, such as something like that, it really should, hindsight's 2020, but it should have impacted and really activated my ejection plan, because the actual environment of the crypto market and the outlook for it materially changed at that time. So that's a lot of what we do, with our monthly sort of pulse checks on the market, our outlook on the market. We're sort of really keeping tabs on, hey, is the situation still the same here, the outlook, or is there certain things happening in the economy or any other reasons why any one sort of outlook should be materially impacted? So a really good takeaway there for everyone. But Simon, maybe just share a bit about, what is your sales strategy heading into 2025?
Yeah, sure. So this will give you an idea, I guess, how I'm thinking about the market and how I want to execute myself. You guys are kind of come up with your own plans as well. So I'm using partly a target-based approach and a time-based approach to it. And I guess I can also do a little bit of a sentiment analysis into my thought process as well. But I guess the basic tools that I'm using is that I'm going to be predominantly using decentralized exchanges for all my sales. For one, I've got a small bag of meme coins, so you pretty much got to sell a lot of those on there. But my main accounts, I can still basically sell decentralized. I will bring back to Australian dollars basically what I have to pay for tax. So I definitely know that. I'm going to have to bring some money back for tax purposes. But for all intents and purposes, I'm fairly crypto native. I'm going to stay on chain. What am I going to do with that money? Well, it's going to stay in stable coins. I'm pretty confident in stable coins these days. And I'll probably put some of that into some of the lending platforms, like Camino Finances or Aave, to earn some yield on it. But at the same time, I'm not committed to doing all of that, because if I've got stable coins in there, if I'm putting them on smart contracts, that's risk. I could just leave it there for a couple of years until the bear market goes down and then be ready to redeploy. And someone might say, well, you might cop some inflation by losing the value of US dollar. I'm okay with that for a year or two maybe, as long as it's safe, and then I'm ready to redeploy. And so that's my kind of personal strategy. It's decentralized exchanges predominantly, bringing back to AUD what I need to for tax. There's a few little lifestyle chips I'll take off the table into AUD as well.
In terms of my approach for next year, I'll be looking to get out 100% of any cryptocurrency that isn't Bitcoin or ETH. So, my approach to doing so is different depending on the risk and the market cap of certain cryptocurrencies. So the more lower cap, coins or tokens and meme coins, they're a lot more, for me personally, based on sort of percentage of profits. Whereas I have a more a price target approach for some of the more major cryptocurrencies, like Solana, which I've held and luckily bought into around the middle of last year. So I've got my sort of staggered sort of sells into next year. And yeah, we are running out of time, so we can sort of talk more about this over in the booth at the Collective Shift booth in the middle of the floor there. We can also answer some questions right now and immediately after this talk. But yeah, looking to hold essentially all my Bitcoin. I might sell a bit depending on sort of the overall situation of particularly what happens in the macro environment and what happens with Donald Trump's sort of Bitcoin reserve. So that's something we're really focused on as a research team at the moment, but definitely want to be out 100% of all altcoins by the top of this bull market, which I still think will be middle of next year, but still open to things changing, of course. So we might have one time for any question. Is there anyone who has a question? I'll just go over here. Yeah, so we offer, up on your screen there's a 10-step crypto investment sort of plan and strategy that you can go through and work through yourself. And then also on the right there is our to learn more about our membership offering. So yeah, we've been living and breathing crypto for many years now. And we really love just providing members with all the information they need to navigate the crypto market with confidence. So I'll just hand it over to you for your question.
Thanks, guys. In the beginning, you talked about a few different scenarios of selling at the top and buying the dip or buying lower. In terms of the sell strategies, you talked about offloading holdings at certain points based on BTC prices going up. Is there a general approach or a strategy around buying back in, right? So if you're offloading your holdings, you get to a point where you've completely offloaded your holdings, but you're in a bull market. Obviously, buying back in, you're going to get smaller increments or lower volumes over time, which means smaller profits. So what's your take on buying back in?
buying back in while the bull market's still moving, you're trading. You're a trader now. And so if you want to be a trader and you know you're a trader, go for it. But I'm an investor, so I don't play that game. I think we're out of time, Matt. Yeah. But any more questions, guys? We're at the booth over there, just opposite. So come and have a chat.